Question 1. What is accounts payable? Accounts payable, or AP, is the amount of money a company owes to its suppliers for goods or services purchased on credit. For example, ABC Manufacturing purchases raw materials worth 5 lakh rupees from XYZ suppliers. The supplier sends an invoice for 5 lakh rupees, but ABC has not paid yet. That 5 lakh rupees becomes an accounts payable liability for ABC. In simple terms, accounts payable is the process of recording, verifying, and paying supplier invoices. Question 2. What is the difference between AP and AR? AP means accounts payable, while AR means accounts receivable. AP represents money the company needs to pay suppliers. AR represents money customers need to pay the company. For example, if ABC buys materials from XYZ for 5 lakh rupees, ABC needs to pay XYZ. That's accounts payable. If ABC sells products worth 8 lakh rupees to a customer and hasn't received the money yet, that's accounts receivable. An easy way to remember it is AP means we pay and AR means we receive. Question 3. Explain the procure-to-pay process. P2P stands for procure-to-pay. It is the complete process from requesting a purchase to making payment to the supplier. A typical process starts with a purchase requisition, followed by a purchase order, goods receipt, invoice, invoice matching, approval, and finally payment. For example, a manufacturing company needs raw materials. The purchase is requested, the PO is created, the materials are received, the supplier sends an invoice, AP verifies it, and payment is eventually made. This complete cycle is called procure-to-pay. Question 4. What is a purchase order? A purchase order, or PO, is an official document issued by a buyer to a supplier confirming what the company wants to purchase. For example, ABC Technologies orders 100 laptops at 50,000 rupees each. The total PO value is 50 lakh rupees. The PO normally contains information such as the supplier, item, quantity, price, delivery details, and payment terms. The PO becomes an important reference when AP processes the supplier invoice. Question 5. What is a GRN? GRN stands for Goods Receipt Note. It is created when goods are received by the company. For example, ABC Manufacturing orders 1,000 units of raw material. The supplier delivers the material. The warehouse checks the quantity received and records the receipt. If the GRN shows that 1,000 units were received, AP can use this information during invoice verification.
Question 6. What is a non-PO invoice? A non-PO invoice is an invoice that does not have a traditional purchase order associated with it. For example, certain utility bills or professional service invoices may be processed through a non-PO process. However, no PO does not mean no verification. The invoice still needs to follow the company's required validation and approval process. Question 7. What details do you check on an invoice? Before processing an invoice, AP checks important details such as the supplier name, invoice number, invoice date, PO number, quantity, price, tax information, total amount, and payment terms. For example, if the invoice amount is 5 lakh rupees, but the PO number is missing, we should not simply process the invoice. We should follow the company's procedure to validate and resolve the missing information. Question 8. What is two-way matching? Two-way matching compares two documents, the purchase order and the supplier invoice. For example, the PO says 100 units at 1,000 rupees each. The invoice also says 100 units at 1,000 rupees each. The details match. That is a simple example of two-way matching. Question 9. What is three-way matching? Three-way matching is one of the most important AP interview questions. Three-way matching compares the purchase order, goods receipt note, and supplier invoice. For example, the PO is for 100 laptops. The GRN confirms 100 laptops were received. The invoice is also for 100 laptops. Everything matches. But imagine the GRN shows only 90 laptops while the invoice is for 100. Now there is a discrepancy that needs to be investigated before payment. Question 10. Difference between two-way and three-way matching. The difference is simple. Two-way matching compares the PO and invoice. Three-way matching compares the PO, GRN, and invoice. Three-way matching provides an additional check that the goods or services were actually received. Question 11. What if the invoice amount doesn't match the PO? Suppose the PO amount is 5 lakh rupees, but the invoice amount is 5 lakh 50,000. There is a 50,000 rupee difference. I would not immediately process or reject the invoice. First, I would investigate the quantity, price, contract terms, and whether there was any proved change. Then I would follow the company's approval or correction process before processing the invoice. Question 12. What if the GRN is missing? Suppose the PO is for 500 units and the invoice is also for 500 units, but there is no GRN. I would first verify whether the goods were actually received. Then I would coordinate with the warehouse or receiving team according to company procedure. I would not bypass a required control simply because the supplier is requesting urgent payment. Question 13. How do you identify duplicate invoices? Duplicate invoice detection is an important AP control. Suppose the system already contains invoice IN V1001 from XYZ suppliers for 2 lakh rupees. The same invoice is submitted again. A P should compare information such as vendor name, invoice number, amount, date, and PO number. If it appears to be a duplicate, we investigate it before processing to prevent duplicate payment. Question 14. What is an invoice hold? An invoice hold means an invoice cannot proceed for payment until an issue is resolved. For example, the PO is for 10 lakh rupees. The invoice is also 10 lakh, but the GRN confirms only 8 lakh worth of goods were received. The invoice may need to be placed on hold while the discrepancy is investigated. Question 15. What is a credit note? A credit note generally reduces the amount payable to the supplier. For example, the supplier originally invoices ABC Manufacturing for 5 lakh rupees. Later, the supplier identifies an overcharge of 50,000 rupees. The supplier may issue a 50,000 rupee credit note. The payable amount can then be adjusted according to the company's accounting process. Question 16. What is a debit note? A debit note can be used to communicate an adjustment that increases an amount receivable or payable, depending on the transaction and accounting process. For an interview, don't just memorize the definition. Try to understand why the adjustment is required and how the company records it. Question 17. What is vendor reconciliation? Vendor reconciliation means comparing the company's AP records with the supplier's statement to identify differences. For example, the supplier says 5 lakh rupees is outstanding, but the company's records show 4 lakh rupees. The AP team investigates the 1 lakh difference. It could be a missing invoice, payment timing difference, credit note, or another accounting adjustment. Question 18. What is an AP aging report? An AP aging report shows outstanding supplier invoices according to how long they have remained unpaid. For example, a company may have 20 lakh rupees outstanding for 0 to 30 days, 10 lakh for 31 to 60 days, and 2 lakh for more than 90 days. This report helps AP teams identify overdue invoices and prioritize follow-up. Question 19. What is a payment run? A payment run is a process used to identify and process eligible invoices for payment. Imagine a company has 500 approved invoices. The AP team checks due dates, payment terms, approval status, holds, and other required controls. Eligible invoices can then be included in the payment process according to company procedures. Question 20. What is GST and why is it important in AP? GST stands for Goods and Services Tax. For AP teams, GST related information on supplier invoices may need to be validated as part of invoice processing and applicable tax compliance procedures. For example, a supplier provides goods worth 1 lakh rupees and charges applicable GST. AP checks the relevant invoice and GST details according to company procedures. Remember, AP should follow applicable tax requirements and company processes rather than making assumptions. Question 21. What is TDS? TDS stands for Tax Deducted at Source. For certain payments, tax may need to be deducted before payment is made to the supplier, depending on the nature of the transaction and applicable tax rules. For example, suppose a qualifying service invoice is 1 lakh rupees. The applicable TDS needs to be determined based on the transaction. The company may deduct the required amount and pay the supplier the net amount. If you don't remember the exact section or rate during an interview, don't guess. Question 22. What is GR/IR? GR/IR stands for Goods Receipt and Invoice Receipt. It is commonly used in ERP environments to manage differences between goods received and invoices received. For example, goods worth 5 lakh rupees are received and the invoice for 5 lakh rupees is received. The related entries can be cleared according to the company's accounting process. If goods are received but the invoice hasn't arrived, a balance may remain and require investigation. Question 23. Which ERP systems have you worked with? Interviewers may ask which ERP systems you have worked with. Common examples include SAP, Oracle, Microsoft Dynamics, Coupa, and other company specific systems. If you have experience, mention exactly what you used the system for. For example, I worked with SAP for invoice processing, PO verification, vendor account review, and payment related activities. If you are a fresher, don't pretend you have experience. Instead, explain that you understand the AP process and are willing to learn the company's ERP system. Question 24. What are AP KPIs and SLAs? This question is especially important for BPO interviews. KPI means Key Performance Indicator. SLA means Service Level Agreement. AP teams may be measured on invoice processing time, accuracy, productivity, exception rates, payment accuracy, and query resolution. For example, suppose the invoice processing SLA is 48 hours. An invoice arrives Monday at 10 a.m. Assuming all required information is available and there are no applicable exclusions, the target processing time would be Wednesday at 10 a.m. Question 25. Vendor says payment is overdue. What will you do? Now let's finish with an important scenario based question. Imagine a vendor calls and says, "My payment is overdue. Please release it immediately." What would you do? First, check the invoice in the ERP. Second, check the invoice status. Is it pending, approved, on hold, rejected, or already paid? Third, check the payment terms and due date. Fourth, check whether there are any exceptions, such as a PO mismatch, missing GRN, or pending approval. Finally, take the appropriate action and communicate the correct status to the vendor. A strong interview answer is, I would first verify the invoice status, due date, payment terms, and any holds or exceptions. Then I would identify the reason for the delay, coordinate with the relevant team if required, and provide the vendor with an accurate status update.